Hey guys, Gold Streams here again with another breakout trade on the 21st of January. So, as you get the gist of it now, what we do, we come in pre-London, we keep an eye on the markets until about 2 hours after London open, right? So, it's very, very simple. In that time, we merely look for a breakout trade or some sort of impulse entry. Now, what we had today was very, very clean moves on gold. I'm going to show you. So this is the 30-minute time frame. So the 30-minute time frame was what we used. So we had a consolidation gold here around 35 pips. We had clean range until around, I think it was 27.34. We had clean range to the upside, and then obviously down below we had clean range of like 180 pips for gold to move down. So we come in pre-London. We're merely seeing what the market does. We're going to see what the market can give us. We're waiting for a breakout either below 27.27 to obviously head above and fill the range of around 40 to 50 pips. Or we're waiting for a breakout below 27.23 and obviously to go down. Okay, and 180 pips to the downside. The most important thing about trading gold in pre-London and London Open is constantly keeping in mind that you can have big moves. You can have very, very clean moves. It's just about being patient and understanding what you're looking for. So it's very important when you come into the charts to mark out your resistance levels, right? So you know sort of what you're waiting for, right? And at the same time, then mark out your supports as well. So just put this into your rules that you understand that sort of if you can get a close above this blue line, then you're looking for a buy. And if you can get a close below this blue line, then you're looking for a sell. Obviously, it depends how the candle closes. It depends how your stop loss is going to be and what it looks like in terms of the market. So what we're doing here, we're simply waiting to see if we can get a candle to close above 27.27. I'm not interested in taking impulse entries. This wick to the left hand side, it's a rejection wick. At one point, you have to understand that this was also a very, very bullish candle, but it closed back in the range. So at this point, you're simply waiting to see what you can get out of the market and sort of in what makes sense to you. Okay. So yeah, so we're approaching here around 7 a.m. It's very, very early. This is pre-London, just started the session, and we're just waiting. So we're going to speed this up a bit just to show you sort of what happened. And obviously, lucky we didn't take any buys above this range. Like I said, it's not ideal for an impulse entry when you've got rejection wicks to the left-hand side, right? So I'm not taking any trades at the moment, not taking any buys, not taking any sells. Once this candle started forming, I was looking very intensely into the market and waiting for a close below here. And obviously a lot of range to the downside, 180 pips. I would have been happy with 30, 40 pips out of this range. But as you can see, market is not giving you any sort of structure, any closure, or anything that we want to see that makes sense to us. So we're simply waiting for gold to come out of this consolidation, right? And I'm just going to speed this up a bit so you guys can see. I want to explain to you obviously the entry. So right, see this candle closed, but it closed above this support in respect to the support. Now it doesn't matter if this candle breaks the low. And what it does, I'm not interested in the entries because these wicks to the left hand side, they're rejection wicks and the candle didn't close below support, right? It's very important to understand that you're waiting for candle closures. If you miss the trade while you're waiting for candle closures, then you can look on the lower time frame, i.e. the 15-minute time frame, and see if you could have had an entry. If you couldn't have had an entry on the 15-minute time frame either, then it is what it is and you missed the trade, right? But for example, this is why we wait for closures when there's rejection wicks to the left-hand side. See, the candle came down, it broke the low, it made a top wick first, it looked perfect for an entry, but it came back up and it broke its own high. So the sells are invalid. The minute it did that, sales became invalid. Let's slow this down a bit here just to show you, because now we're coming up to the actual trade that we took. As you can see now, so the 30 minutes is about to close. 30-minute candle has now closed, right? And you've got a close above 27.27. You've got a very, very strong bullish close. This is half an hour before London Open. So London Open is half an hour. And as always, I don't want to take a trade, but in this particular case, I don't want to take a trade on candle open because the stop loss is going to be 54 pips. It doesn't make sense. On the 15-minute, if I'm not mistaken, I think the stop loss was around 30 pips. Yeah, it was around, one second, I've got it here. It was around, yeah, so on the 15-minute candle, it was around 30 pips stop loss. So ideally speaking, I'm waiting for this new 30-minute candle to come down, make a bottom wick, and then start breaking its own high. So once this candle then broke that high, we entered a position. We had our buys in. Very, very simple breakout trade. Stop loss ended up being 15 pips, right? And the take profit was around 20, 30 pips. So this is like 30 pips. So yeah, we took 30 pips out of the trade. But the stop loss doesn't go down here. It doesn't go below this zone. It doesn't go below these candles. It goes below the current candle. Because if this candle came up and broke the previous candle high, also broke its own high, then it's got no business in coming down and breaking its own low again. Otherwise, then your sales are invalid, right? In terms of managing risk on this trade, it was very simple. If the candle came down and started testing this area again, it means I would close 50% of the trade, right? Once the candle broke these highs to the left, right, putting us into about 15 pips of profit, stop losses went to break even. Now it's got no business of coming back down and trying to test this open price. We've got clean range all the way to the top. Stop losses go on break even at this point, right? We're in like 20, 24 pips in profit, and we're waiting for TP to get hit. Perfect. That was the trade for the day. Clean breakout candle, right? Nice bottom wick first. Candle came up within like the first, I think it was the second 5-minute candle, started breaking its own high. Stops were at its own low, so around 15 pips, right? And we had clean range all the way up to here. I secured 30 pips. At the end of the day, it doesn't matter. You can hold a trade. You can secure a trade. It's what you feel comfortable with. It's what you're content. So I made 2.5% on the account. As soon as I hit that, that was my target. The trade ended there. But yeah, I'll include the video now as always, showing the actual trade and the actual entry. So you can see here the trade. You can see the entry where it was as exactly as the candle was breaking its own high. The stop loss was below the current candle. The candle still hadn't broken the wicks to the left hand side. And then you can see now where the stop loss is on break even and the candle's running in around 23, 24, 25 pips of profit. So yeah, thank you very much, guys. Look forward to doing the next video. Thank you.